Hello from Mounted Markets. This is Ahura, and we'll be with you to review what happened in the Federal Reserve meeting and how was the market reaction. We can say that it was a natural and somehow expected. I mean, what Federal Reserve did and the answer is that Mr. Powell said everything was natural, and the market also didn't pay too much attention to that and didn't give so much attention. But however, today and tomorrow, the next days also actually, even thought of next week will be very important. Where the Federal Reserve members, the FOMC committee members, will have more speeches. They will have more comments about the Federal Reserve decisions, and we have to wait a little bit more to see what exactly Fed members thinking about these policies that they already decided about it. So far in the statement, the meeting started on Tuesday, ended on Wednesday. So with the statement that they published, they confirmed that the market expectations of holding the current rates between 4.25% and 4.50%. So there is nothing, no surprise. The quantitative, their policy about the quantitative also they continue to the same policy. So they didn't decide anything to change on that. However, the only thing that changed in the policies, it was that in the statement they mentioned that right now the risk of lower labor markets, slowing labor market, and the higher inflation is more. I mean, the both risks is increased right now, and the markets should be, the Federal Reserve and the policymakers should have more focus on that, and they have to pay more attention on these both sides of the risk that currently they see the same balance of the risk in the market. However, later in this, like 30 minutes after statement, we had a press conference. In the press conference, Mr. Powell at the beginning mentioned again the same statement, the same content of the statement, that they were the committee's commitment to decide to support the American economy and their commitment to support the American people. So they decided right now to hold the rates. And then later, he mentioned about some economic numbers, mentioned that the GDP increased by 2.5% last year, and it was accepted. He said that under labor market, it created nearly about 155,000 nearly job in previous 3 months. So, and also with 4.2% unemployment rate, says that Mr. Powell believes that U.S. labor market is strong enough. Generally, with the inflation at 2.3%, which is so close to PCI at 2.3%, which is so close to 2%. Target says that right now the inflation, labor market, and GDP growth, they are all at the level that we can say that the U.S. economy is moving fine, acceptable, and they can continue with the current condition and hold more before making any new decisions. So this mentioning of these data and talking about the more, especially in the press conference with the answer that he had to the reporters, we can understand that Federal Reserve, at least Mr. Powell believes, we have to wait and see the other committee members' speeches as well. But generally, we can say that Fed believe right now that the inflation is so close to Fed target, while unemployment rate is acceptable around 4.2%, stable, moving around 4.2%. Still, the labor market is resilient, while the GDP growth also is fine. In the press conference, they asked about the 0.3% fall in the first quarter GDP. He mentioned that it was because the same thing that we were talking before in the previous videos also, that this slowdown in first quarter economy, it was mostly because of higher import, because of the people, they made it more import, the companies, the businesses, they imported more before Mr. Trump tariffs affect the prices. So that was the main reason. So that's why it's a short-lived number, and we are not paying too much attention to this short-lived number. So generally, say that we have to wait about the GDP. We have to wait for the second quarter as well, where probably we will have less imports and exports going to increase, and then we can see what's going to happen there, and we will have to wait and see the balance of the risk in the market. So generally, with what we understood in the market, we can see right now that the Federal Reserve is still thinking about the higher for longer, holding the current rate for longer and wait to see what's going to happen in the market. He mentioned too much about the risks of the tariffs and what's going to happen. Probably they don't know. It's the Federal Reserve still is not confident, and they don't 100% know what's going to happen in the market. He mentioned even thought that maybe the numbers that we'll have later would be much better than we expect. But still, the thing is that the problem and the question is that we don't know what is going to happen and what will be the number of the tariffs and how long they're gonna stay there, because the percentage of the tariffs they are saying, he's mentioned that it's much higher than our previous estimates. So the later what's going to happen also is not we cannot predict that. So the predict of the market is so hard right now. That's why we decide to hold right now for more decisions with ongoing trade tariffs, trade talks between, the trade talks that's going to start right now. We have to wait and see what's going to happen there, and because it will affect the next meeting's decisions too much. The problem is, not the problem. The point is that right now we are almost sure that in the next meeting in June, we will not have a rate cut. So there's about 80% chance of holding the current rate. The thing is that in today and tomorrow's speeches, we have to follow these numbers. How right now there is an almost 56% chance for 25 basis point rate cut in July meeting. The question right now is that will Fed rate cut start in July or in September? July or September, that's the question. With the speeches in the next days, with the numbers that we're gonna have till next meeting, that will be more clear. If we have first rate cut at July, which means we have still 3 more meetings after that, and then we can have the more chance for 3 rate cuts in 2025. But if we have the first rate cut in September, right after that, we have only 2 meetings. So there is a less chance for the 3 rate cuts. So we're going to have 2 rate cuts. So the important point of rate cut in July or September is this. That's what we have to watch in the next day. So that's where you have to watch, not the July meeting. In CME Group Fed Watch tool, you have to watch this July meeting and the chance of rate cut in July. What's here? What you have to watch. That's right now is almost 6%. You have to watch if that increase or if it's gonna fall lower. So generally, we can say that the market had almost hawkish tone. The market understand this decisions and this press conference and this statement accepted as a hawkish tone. That's why US dollar index at the very initial reaction increased much higher towards 99.80, but at the beginning of the day, it's slightly had a correction, but right now we can see that it's still increasing. So these decisions is what Federal Reserve decided is about the higher rates for longer, which means that the US dollar gonna increase, going to move above 98 and 99, between 100 and 101. So this is between 98 and 101 is the area that we're expect for the next till next meeting. So generally right now we are totally generally within general outlook, we can say we are almost positive about the US dollar index price, and we can say that the downtrend is over. On the gold price, but it doesn't mean that the US dollar is going to increase too much. It's about 100, 101, nothing more. About the US dollar index, the stronger dollar put the gold under pressure slightly, but generally with the higher gold, with the higher US dollar price, or the US dollar, the higher rate, sorry, with the higher rate, Federal Reserve rate for longer, we can see much more risks in the stock markets and generally in the risky assets markets, which means that the positive for the gold. So the gold even thought it had with some correction, still the overall uptrend is still continuing here. But the oil price, the oil slightly increased today with the beginning of today's meetings, today's trades, because of more talks about the trade talks, more speeches, more the more signs actually about the trade talks, which is going to start on Saturday from US the US and China. They're going to start their first iceberg about the trade talks on Saturday, and that's somehow the oil price had a slightly positive reaction to that. Same thing we can say in the stock markets. On the stock market, since the decisions that we had so far, it was in line with expectations, and we didn't have a specific surprise in the market. We can say that that's why the stock markets, they didn't have specific reaction to these decisions. However, with the trade talk signs, we had a positive reaction in the stock market. We can see the same trend in S&P 500, NASDAQ, and in Dow Jones as well. All of them, they had a positive reaction to the trade talks. But the thing is that trade talks, even it's going to start, it's not going to finish so fast. So the trade talks going to take a longer way. Maybe emotionally, they have some positive reaction at the beginning, but still there is a long way to go as the problems, as the misunderstanding or challenges. It doesn't matter what I don't know what we have to exactly call that, because if that's a misunderstanding, or it's the correct understanding and it's a challenges, whatever we call it, that's too. It's not. It's they're the two deep differences, ideas between two countries. So we can say that it's going to take a little bit longer to make it to become some final points. That's why we can say that. For now, stock markets, even though they had a positive reaction at the moment, with the higher rates for longer, we can say that these reactions going to be limited, and still we are about that to see another correction in the stock markets. We can say that the stock market, S&P 500 and most of US indices is going to slow down in this week, and going to be ended the week after 2 or 3 weeks. Uptrend this week is going to be ended lower. We are not expecting to close the week higher. On the cryptocurrency markets also, we had a positive reaction as the stock market increased. Generally, right now, we are positive about the cryptocurrency market, especially specifically about the Bitcoin market. We don't have any negative reason right now, technically and fundamentally, but still, the next technical level is 101,000, and the continuing of uptrend is dependent on how we can prove about it, how this level will be reached, and how the Bitcoin can hold its price above 101. Otherwise, the correction towards 94 and 92,000 is accepted if the price cannot go above 101,000 US dollar. That's what's happening in the market and our expectations. If you had any other question, don't forget to write in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye.